Many people uncertain about South Africa's financial future. Well, many things are leaving people uncertain about South Africa's financial future. Even though the budget speech was not delivered last month, speculation on key tax changes are abound, including a 2% increase to the VAT rate. As always, there's also the threat of a wealth tax hanging over the affluent taxpayer. But what exactly is the deal with the wealth tax? We're talking about it with Don Paul Fraser from Tax Consulting SA. There are concerns that wealth tax could accelerate the brain drain from South Africa, that we're losing a lot of really talented people. But in terms of, high net worth individuals, it must be even more. What are your thoughts on how this could impact the country's economic challenges?
Firstly, I definitely do think it would lead to an accelerated brain drain, which at present is already at a rapid pace. So our deal with cross-border tax and on the ground practically and consulting with these individuals that are leaving the country. And they are leaving in incredibly high numbers, So already without the implication of a wealth tax, and as you correctly said, those individuals who are high net worth already have the means and the funds to actually relocate when and to wherever they wish to go, So with South Africa already having a high tax rate, looking to tax wealth generation would definitely increase the drain of the educated, the highly skilled, and also those who are very entrepreneurial from South Africa, which South Africa so dearly relies on. In terms of economic challenges, what follows from everyone leaving the country is a smaller tax base for SARS. And needless to say, we are also all aware that our tax base is currently also made up of a minority of those high-income earners. So that specific demographic leaving is incredibly detrimental to South Africa's economic challenges.
I can imagine it'll also have a dampener on investor confidence.
Definitely.
The Davis Tax Committee recommended more data and analysis before implementing a wealth tax. In your view, what's missing from the current discussions on this topic? People do kind of have very narrow discussions around it.
So it is such a controversial topic, and it also is something that everyone kind of tiptoes around. So essentially, a main consideration that came from the Davis report was what assets to include and liabilities to include to get what someone's net wealth in fact is. Retirement funds makes up, as an example, a large portion of an individual's wealth. And with South Africa generally excluding the retirement funds from a capital gains tax or almost those type of assets, would retirement funds be included or not? I mean, the answers to some kind of questions are no means straightforward. In particular, question of forms of wealth to include is definitely, and I think the words they used in the Davis report, a vexed one. Ideally, what should be included, what should be excluded, and also the effect it would have on how do you actually tax that net wealth. Because bearing in mind, it's very different from an income tax, which is income that you're receiving being taxed. Someone who has a high net wealth doesn't necessarily mean they've got the liquid cash to actually pay the tax on maybe a fixed asset, if that makes sense.
Vexed is the right word. With many wealthy South Africans already opting for financial immigration, as you already stated. Give us a sense of what the numbers actually tell us. We talk about this and people don't really have a sense of how bad is the situation really.
So there's two considerations here. There are those that we have recorded. So as an example, this is not specifically high net worth individuals. In the last 5 years, an estimated 40,000 South Africans have ceased their tax residency. And bearing in mind, those that have formally ceased their tax residency, there's still a large number unaccounted for who have just left the country, who are not paying tax, and actually haven't formalized their non-tax residency. So that number, 40,000, definitely substantially higher. But insofar as high net worth individuals go, in 2024, Henley and Partners report indicated that there was an estimate of 600 high net worth individuals leaving the country in that year. So that's 600 multimillionaires who fall in the high net worth bracket, which SARS indicates is over 75 million rand in net wealth. So those are the kind of individuals we're talking about here, and over 600 were projected to have left last year.
That is really shocking. As we approach the national budget, which was postponed and moved to March, what do you think, Jean-Paul, is the likely outcome regarding a wealth tax? But most importantly, what is the alternative to this?
So you never really know what exactly is going to be finalized from the budget speech. Definitely, it's obviously a controversial one at the outset for it to have been postponed. In terms of that, I mean, SARS or the country is definitely looking to increase its revenue collection. And I mean, that is evident by the proposed increase of 2% of VAT that would be an alternative, for example, to a wealth tax. Whether it would serve the same purpose or not, another story. But in terms of a wealth tax, it's very hard to confirm whether it would be implemented or not. There hasn't been too much, how do I say, finality to the discussion since the Davis report. And obviously there were further recommendations made in that report. So whether it will be implemented in the budget speech or not is very tough to comment on. But alternatives, I think, as a country, our personal income tax rate is incredibly high already. Then we only have other avenues to consider, such as your VAT, your corporate income tax. Personal income tax is already 37% of what we're bringing in. VAT is sitting at 25% of what we're bringing in, and 18% is from corporate income tax. So, and only 18% is made from other taxes. So there isn't much alternative to the amount or volume of funds that we're looking to collect, aside from a wealth tax or an increase in VAT. So it is a very tough, stuck between a rock and a hard place, if I could say that,
The Business Hour on OFM.